Let's take a look at some charts on Dogecoin from this week's article on Brave New Coin. So Doge is a proof of work meme coin that is merge mined with Litecoin. So Dogecoin's hash rate and difficulty will mirror Litecoin's hash rate and difficulty because they're mined at the same time. And if you look at where hash rate has been over the past few months, it's certainly increased dramatically. That's always good to see. You don't want to see a coin lose 70% of its hash rate and then continue to lose hash rate. So there's clearly some profitability threshold that was hit here, and miners became profitable again. If we look at the ASICs, now this is script algorithm, the profitability is mainly for LTC, at least as far as I can tell from this website, ASIC miner value. This doesn't calculate your Doge gains potentially, but seeing that the LTC ASICs are in profit, at least 4 of them, means that Dogecoin also benefits from that hash rate. If we look at transactions per day and average transaction values, transactions per day have mirrored hash rate in that it has increased since April pretty dramatically. For Doge, it's kind of at the upper quarter of, maybe upper fifth of historic transactions per day on chain. Typically bullish in a vacuum. Average transaction values have fallen off, so you're seeing more transactions at lower values, which is typically the case. Anytime you see more transactions, you usually don't see more transactions that are greater in value, typically. So everything makes sense here. If we look at active addresses in the fill here, and NVT, an inverse metric of economic utility, you want NVT to be low because that says that the market cap is undervaluing the on-chain activity. Right now it still says that historically the market cap is kind of overvaluing on-chain activity despite rising on-chain activity. So that's certainly not bullish. Looking at active addresses, they fell off pretty hard since the Litecoin halving basically. So this kind of mirrors hash rate, and then it fell 70% and it's begun to recover. It fell again on March with a drop in price and it's begun to recover. So it's hard to be convinced that any of this is like organic user activity, and most of this is just mining related. Although it looks like active addresses are higher than they have been pre-2018, I guess that most of this is just more people mining LTC and Doge than users using Doge. If we look at MVRV, another one of these economic utility indicators, you can think of it as an oscillator. If we're down here, we are in the oversold territory. If we're up here, we're in the overbought territory. Not super convincing going back since 2014 because you get these wild periods of crazy overbought and you're mostly just in the oversold territory. But if we are down here, it says there is lots of potential for upside. Not guarantee, obviously, but lots of potential. And that when price has increased, it's been pretty obvious on MVRV where the top was. This is Google Trends, people searching what is Doge, where do I buy Doge. This is for Dogecoin specifically, the word Dogecoin. So we're not getting any Doge memes in here, Doge meme searches. This is purely Dogecoin related, and just like everything else during the bubble period, Google Trends popped way up, and it's kind of been muted ever since then. It's had some minor activity here and there, but this is a good indicator to look at for grassroots activity potentially before price moves. So this is since 2018, and you can see it's mostly been flat. There's really not been anything too exciting going on here, so not particularly bullish in that regard. If we switch gears to price, we have Bollinger Bands here, yearly pivots, VPVR, and RSI. And really the main thing I'm looking at is historically where's Doge right now based on 0 to 100 sats, because it ranges typically from 15 to 30 sats all the way up to 80 to 100 sats. It's usually the range. Before recently, the cycles were actually pretty predetermined. It kind of happened every 250 to 300 days, and we're way past that now. We've been sideways for a year on Doge, which is unprecedented for Doge. And you're seeing the Bollinger Band squeezes. This is the fill here. If it's below the 20 SMA, it's going to be red. If it's above, it's going to be green. If it's red, you expect the breakdown to happen. If it's green, you expect it to break up. You can see that anytime it's been this tight of a squeeze, it's actually had a bearish continuation, but it's broken down quicker than it has now. It's just really done nothing, for a year. So what I'd really like to see is a break above 30. That's the first thing. That's the Bollinger Band. A break above 40, this high VPVR zone. And after 40, it's more convincing that it's going to at least make a run to 65, 70, this next yearly pivot. 100 is probably going to take some effort. But the other thing about Doge is when it does move up, it moves up with ferocity. And the down move is usually, like I said, 200 days, 300 days. So there's usually a ton of FOMO and just slow bleed. Ton of FOMO, slow bleed. We're waiting on that ton of FOMO. RSI is leaning below 50 in bearish territory now. Less convincing that as we stand here, we'll have a bullish breakout anytime soon. Looking at cloud on the weekly, which is not really anything you can do for an altcoin, most altcoins, but because of Doge's data since 2014, you can do this. In a vacuum, the cloud is telling you we're definitely bearish. We've been bearish since we're below the cloud. It's also telling you bearish momentum is waning because these TK lines were super far apart, now they're getting closer together. And if we stay sideways, these TK lines will flip bullish, and that's when you may see the move to 30 to 40. Really, the cloud doesn't want you to get long until it's above 65 on the weekly, which is probably too slow of a signal. But it's always good to start on high time frames and move on down. So this is the daily with the cloud, the 50 and the 200 EMAs. And you can see the 50 and the 200 have been bearish since early 2019. So it's definitely been over a year, 500 something days now. We've been bearish. Tried to break above the 200 6 or 7 times, hasn't happened. Tried to break above the cloud 5 or 6 times, hasn't happened. So this is probably the shortest time frame I'd want to watch for any moves in price action. Because if we start to get a move above the 200, above the cloud, which is somewhere around 30 sats, that'll be a good sign at another attempt, at least, at bullish momentum to the upside.